Hello everybody, so this is an intro to an intro, but in this video it's a little snippet from the course that I thought I would share with you guys. I've done a video on highs and lows in the past, but I didn't like I just didn't like it, so I thought, you know what better way to just throw out a free clip from the YouTube from the course. It's got so much value in here. And yeah, because I got a lot of questions. People ask me, and you probably relate to this as well. How do you map out your highs and lows? How do you identify a higher high or a higher low? Do you have any rules for it? And this is literally it. And if you can implement this in the M1 chart, literally just the M1 chart, locate the order blocks, assuming that you factor in liquidity and confluence and things like that. This is all you need. Obviously with the adequate knowledge. But yeah, this is generally all you need, especially if you don't mark out your highs and lows. So make sure you do listen up, make sure you're taking the value, make sure you obviously get your journal out, take some notes, and yeah, any questions, make sure you pop me a message on Instagram or wherever suits you best, Telegram, whatever. More than welcome for everyone to message me and I'll reply as soon as I can. Like I said, because this is a little snippet from the course, if you want to get access to a full course, make sure you head over to our website, there'll be the link below. And yeah, even if you want to just join a community as well, if you're a bit more advanced in trading, you find yourself you're really profitable, but you thought you just want to be in a community, come and try it out, see what you think, and I guarantee you won't be disappointed. We do loads of things in the Discord, are very active, a lot of people are interactive as well. You can send your own charts, you can jump in trading floor voice channels. Derek, our newest coach, shout out to Derek, amazing trader. He has he's starting this new live trading in the Discord, so everyone can join, the members, everyone can talk, questions, and I'll be in there from time to time as well, and the other members. And yeah, it's just going to be a great place to be. And like I always say, you are who you hang around with. So if you hang around with like-minded people, you're only going to set yourself up for success. So with that being said, guys, thanks so much for watching, and yeah, catch you in the video. Hello everybody, welcome back to this video. Now this one we're going to just discuss trading range highs and lows. So pretty much I'm just going to, it's sort of like a way to identify high and lows in the markets, and it's a very effective way, and it only contains 3 candles. It just keeps things simple, rather than trying to, because sometimes you will get lost on the charts. You'll probably look at market structure and think this is the high, this is the low. Okay, so which one am I going to mark out? Where is it? So this method I put together is a very simple way, so let's jump into it. So as you can see, okay, high and low contains 3 candles. That's all you need to identify a high and low. Now this is the high. If you look closely, this is the high because the high of the candles next to it are lower. Okay, so you got to think, if the market was going down, I'll just get this one, make things easier. If the market was going down like this, right, like that, this would be a low because the candles next to it, right, if we just do whatever, the candles next to it, this would be a high, sorry, because the candles next to it are lower. Okay, so this stands out because usually what you will see when I show you some examples in a minute, usually what you do see on the charts is that middle candle will stay lower. Okay, so if this candle next to it, the wick went higher, that would be identified as a high. Okay, so I'll show you some examples in a minute, but just understand that it contains 3 candles, and to form a high, it's because the high of the candles next to it are lower. Okay, so it could seem a little bit confusing at first, but the more you apply it, all right, and when I show you some real life examples, it will start to click like that. Okay, now moving on to a low. This is a low because the lower the candles next to it are higher. Okay, so if we just jump onto the charts here, where we'll start here. I did do this bit, I haven't done this bit, so let's jump onto it. So as you can see, if we just start off with the low, we have this low here. Okay, now what I'll do is I'll make this thin. There you go. Now why is this a low? Because this low with the candle next to it, the wick, is higher than this low, and this, the candle to the right of it, is also obviously much higher. So that is obviously the trading range low. And then obviously we always go back. Then this is the high. Okay. So as you can see, what I'll do is I'll just zoom in to make life easier. So as you can see, this wick high, right? Yep. And then if we just move on, price broke structure to the upside. So we're now moving into a bullish range. Now these 3 candles, pretty equal. so there hasn't really been formed a high just yet. Right, moving on, moving on, moving on. Okay, boom, this is it. So this here now becomes a high. Why? Well, because this wick of the 3 candles is higher than the candle to the left and the right. We go back, 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 because we always go back in time, and we look here. This low of the wick, right? Let's look at this wick. That's the low. Okay, so we just keep following price, and then as you can see, obviously this would be the trading range. You look for a trade, whatever, drop down a time frame, look for some zones, but that's not what we're focusing on today. And as you can see, price broke structure to the upside. Okay, and now we have this new high, and again, we could probably class this as a low, because yeah, I guess so. Sometimes it will be quite hard to identify, but you gotta really just look at it. If it's that hard, just draw this out and drag it across like that with the shift, and as you can see, the candles next to it just don't break it. Okay, so what I'll do is, as well, just to help make things easier, I'll just make this straight and we'll just follow price. So this is the high, right? This is the low, right? So if you want to trade, we're looking to trade within this range. Next up, price broke structure to the upside, and again, it's important how you map out your breaker structures as well. This wouldn't be a breaker structure to the downside just because it's a wick, okay? But this could be our low for a future high. So if we just look here, price broke structure here, we have this new wick. Go back in time, that's the low, okay? And like I said, we look for, like, this would be our training range, blah blah. You could even refine it to this high, but the low will stay the same. Up to you. Then we move on, price broke structure here, and then we have this one's a sticky situation because this is up to you how you identify it. Like, this could be a high, makes sense, right? But then a break structure here anyways, so this could also be a high, this could also be a low, right? But remember, when we factor in, I'm not sure if you've come across it just yet, but pretty much when you factor in liquidity and imbalance and things like that, things will be a lot easier, because you can, as you can see, we got this huge imbalance, right? So we know that price could potentially tap into it. But just first understand this concept, and then from there, the high broke structure. This is the high. We go back in time. And yeah, as well, another thing as well, when we look at pullbacks, you can measure it and things like that. And this is the low. Okay, so that'll be the low, that'd be the high. Broke structure to the upside. We now have a new high. Come back down. We have a new low. Okay, so sometimes it'll be harder to identify like these situations here, but it's also easier to identify here. So when sometimes it's like that, sometimes you may not want to trade just because it's just not as clear as it is here, for example, right? So move on, we look break structure. As you can see, this is a high. We go back in time. Where's the low? Where's the low? Yeah, we could get away with that. If you guys want to add some rules as well, this is something I recommend backtest when you backtest. If you guys want to add some rules, I'd recommend doing so, because sometimes a lot of people, what they will do is like that is only 0.4 pip wick, right? Maybe if you want a wick that's higher than 5 pips, that would be classed as it. Okay, so those simple rules you can put in place yourself. It's just a minor refinements. As you can see, we broke structure to the upside. This is the high, this is the low. Alright, and then we break structure to the downside. This is the low here. So it's much clearer now. Go back, same high. Broke structure. 3 candles. Go back in time. High. Broke structure to the downside. Low. Go upwards. High. Low. I've already got this one marked. There we go. So yeah, as you can see, pretty much what I'm doing here, guys, is just walking you through identifying these highs and lows, and it should make things clear. Okay. What I would recommend doing after you watch this video is just go back onto TradingView and keep drawing it. and drawing it until it just starts to really stay in there, you know. So we go back in time. That's something to always remember. You always go back in time. You don't go forward, because what a lot of people will, they'll make this mistake. They'll mark out this high, and then they'll go forward and mark this. Well, that doesn't, not that, and that we won't we won't factor this bit in, because that is obviously the market reversing. So if we just look within a trend and market, right? What a lot of people will do is they'll mark this as a high. They'd go back here, mark this as a low, right? When really, what you should be doing is going backwards. So rather than going forwards, you know, waiting for that low to form before going up. Some people get confused about that. I don't know. You may not, but some people do. I've seen it before, and it's a very common mistake to make. So a little tip is just to always go backwards once the high or the low is formed, depending on the structure. If we're moving bullish and price creates a high, we go backwards, you know, downwards. If price is obviously in bearish market and creates a low, we go backwards but upwards, right? So just remember that. So again, we got this low, because obviously again the wick, right? Again, these are simple rules as well. Would you class this as your wick? Well, I still would, but that's up to you. These little things you can go and back test through. This is the high. So, you know, like I said, you know, not all the time will it work out, right? As you can see here, this is the low, right? What did price do? Well, it came back down, tapped into this imbalance. Okay, so if you were looking to trade within this little trading range here on a smaller time frame, you may take a small loss, or I'm not sure. We'll have to look at this price here. I can't go back and look on a low time frame because it's 30th of August, so if I go on a lower time frame, it'll just cut me off anyway. But you know, that's just something to just factor in. Like, it works out the majority of the time. That's what trading is. It's based on probabilities. So, you know, it's sort of like this works more than it doesn't, you know, this works less than it does, things like that. That probably doesn't make sense right now, but it will start to click, and just remember those things, you know, that you can go back and watch these videos as well. And then from there, obviously, you know, and like I said, just go ahead and draw these out, wait for price to break structure out of the range, because like I said, you know, we look here, right? What did price do? Broke structure to the downside, so we can have this as our breaker structure, right? We're moving to the downside, we're going to look for sells. Right, we want to locate the order block. Well, this is the last up candle before the down move, so we can go ahead and mark this as our supply zone, right, or order block, whatever you want to call it. And as you can see, right, if you set like a sell limit there, boom, there's your entry, target lows, whatever, nice little trade, right? But what we would usually do is, because we look for these extra confirmations, for example, like we'd flip to the 15-minute when price taps into this 4-hour zone, look for a 15-minute chock and so on, right? But that's just a little mini lesson on that, just a more of awareness thing. As you can see, we broke structure to the downside, right? And you can go ahead and label these once price does break structure to the downside or upside, whatever. Like for example, if we look back here, right, this here would be our chock, right? This here would be our breaker structure, okay? And the only reason you're probably thinking, whoa, you're doing this fast, and it's because when you learn something, there's 4 stages of learning. Right, what we've spoken about in the previous sections, so always go back to that. Okay, so that's why I recommend watching videos at least 4 times, just because of the 4 stages of learning. 3 times is enough, but you know, you really need to just take any information, take down notes, and then you need to go back in time and look at yourself. Look for yourself, not look at yourself, but look for yourself and try and apply it. May not make sense at the start, watch the video again. Okay, trust me, it'll start to make sense, and I just keep sticking it out. Trust the process. Don't get pissed off with yourself. Obviously, well, easier said than done. And I know a lot of people will get pissed off themselves. And at the end of the day, it's trading. It can be stressful. But you know, if you have any questions or concerns or issues, pop it in the questions chat in the Discord. Not only will I answer, but the other members might answer as well. And there's all different types of skill levels in this Discord, which is what I absolutely love. So, moving on, as you can see, broke structure to the downside. We now have this low. Again, forms of 3 candles. Always remember that there's 3 candles. We go back. We look at this as our high. Right. And what did price do? Broke structure to the downside. So that'd be our new low. That'd be our new high up here. So I just thought that was the high, but it's not. And then obviously broke structure to the downside. But before I move on, actually, I just wanted to mention, like, a lot of people, what they might do is as well, And the only reason why I'm mentioning is whether or not you may not make this mistake is still awareness for the majority of the people that might do. Okay, and I want to explain things to avoid. So a lot of people would have this as their low, and then they'll start to look at the price, and then they'll class this as their low, but that's not a low, right? Now if you're wondering why that's not a low, it's because it's still within this range. So this is obviously the low, this is obviously the high. So in order to create a new low, price would need to break below this low. In order to create a new high, price would need to create create higher prices and break above this high. So that's just a simple little thing to avoid. A lot of people, it's an easy mistake, I get it. Like a lot of people think, okay, this is our low, right? This is our high. Okay, it may be on a lower time frame, but just remember that. Okay, just a little tip there for you guys. That depending on what time frame you're on, you should only have one high or low on that time frame. And then obviously, for example, this is the 4 hour, right? If we went down to the 15 minute, that'd be, that would probably be like the high and low for the 15 minute. So yeah. And again, this is our low, isn't it? So what do we do guys, we go back in time, and straight away, very noticeable. Okay, now boom, now what did price do? Broke structure here, so we can go ahead and mark this as our new low. We go back in time, new high. Again, it must contain 3 candles. Okay, contains 3 candles. As you can see, right, we formed a low, price came back up, tapped into whatever, broke structure to the downside, created a new low, go back in time, create a new high. Okay, so broke structure to the downside. Actually, yeah, that's the low there, sorry. Then you go back upwards, that's the high, and then we just go right, okay. Price broken to the upside. No, I don't use wicks as my breaker structures. I personally don't recommend either, because a lot of people, if you use breaker structures as closures, like this here, this is not a breaker structure, this is, in my eyes. Okay, a lot of people may use this as their breaker structures. The only reason I don't use wicks is because it's easier to identify wicks as sweeps. Okay, because a lot of the time you will see like a wick of the major high or low, and then a reverse, and these fake outs will happen. So even though we've only broken structure to the upside, right, we can go and locate, this is our high, we go back in time, this is our low, right? So at this point, we got to remember that this would be classed as a chock, right? And a chock just simply means that it's unconfirmed trend. So it's just sort of like a fake out. If it went on to break another high, like for example, if it come back down here, tapped into a demand, creating a new high, that would be classed as a bullish range then, because we've broken above the new high. Then obviously we'd have a new low, a new high, whatever. Okay, but because this one here, as you can see, it just created a new high, probably just mitigating something within here. Like this is a buy to sell sort of entry model. So yeah, just factor that in. Like I said, still mark it up. If you want to take the buy here, that's fine. If you take the loss, that's fine. We take losses. The losses are inevitable. We move on and we adapt to the market, okay? But it's one of them. We can avoid these losses, because what would happen here, right? This would be our demand zone on the H4. Price would come back down, tap into that H4 demand, and what we would usually do is look for a 15-minute change of character to the upside. If there was no 15-minute change of character to the upside, well then there's no entry. Okay, so always look for the change of character on a lower time frame. If you're taking a risk entry and you took a buy here, then yeah, you probably will take a loss. But we don't trade really risk entries unless we really have to. But yeah, just factor that in. And then obviously from there, we've got this low here. Well, actually, no, this isn't a breaker structure, sorry. That's a great example, actually. I even got trapped then, but I quickly corrected myself. So just remember that, yep, this here is not a breaker structure, okay? This here is a breaker structure. So once a breaker structure has happened, we wait for price to start pulling back, and as you can see, this here is obviously, quite clearly the low. We go back in time, and this is obviously clearly the high, okay? And from there, what do we have? We had a breaker structure to the downside. I'll use this one. This is the low. We go back in time. This is the high. What did price do? Broke structure to the upside, and then from there, this could be classed as it, but like I said, if you want to use like a certain amount of pip rule, that's fine. And as you can see, our price obviously formed at a high, we got back in time, that's a low. Then obviously at this point we've sort of confirmed this bullish trend. Whether we continue, I don't know. And then obviously from there we've got this high, got this low here. But sometimes when it's a bit small like this, it will be trickier to find. Like I said, if you want rules, you can develop your own rules around it. You're more than welcome to share in a Discord and ask for other people's opinion. Like for example, should I wait for a 10-pip pullback? Well, that's up to you. If you have evidence to support that it works, pop it in a Discord and we'll all chat about it. Then obviously from there, like I said, this isn't a breaker structure, this is just a wick, so that is no low. But we did break structure down here, so that's the low. Go back in time, that's the high. Right, so we're back up in a bullish market. It just looks like we're filling this imbalance, to be honest. If you know what imbalance is, then you know. And then obviously from there we go up and up and up, and boom, go back, same low. It's usually the same low anyway, a lot of time. And then this is our trading range. Like I said, if you want to go and look for buy opportunities from this demand zone, whatever, wait for price to tap into it, blah blah. Then obviously from there we have this high, then this low. I'm gonna end the video in a minute, guys, just because I don't want it to drag on too far. But like I said, it's just a walkthrough. It's an exercise. I want you guys to just keep watching and watching and watching until it really stays up in your system, like in your mind, so it becomes second nature by default. Then obviously broke to the downside. It's the low. Go back up. Same high. Blah blah blah. Broke structure to the downside. New low. New high. And you know, it may be a little bit confusing at first. Like I said, it may get some points where, for example, like this, but all you got to look at is 3 candles, right? And you got to ask yourself, is that middle candle lower than the other candles, wicks? Okay, if it's like this, I mean, you could zoom in and take a look, and like as you can see here, right, is pretty equal, but that right one, sorry, is a little bit lower, so that is still technically classed as, you know, a low. So yeah, that's the best way to put it, I guess. Like I said, it will continue to go on and on and on and on, but you know, just follow this little simple method to map out your structure on your highs and lows, and things will become a lot clearer. Trust me, right? Whether we take losses are inevitable, that's absolutely fine, but this is just a small piece of the puzzle. We tie this in with the daily structure, you know, so we look at the daily range, we tie this in with the 15-minute confirmation entries on the low time frame, the 1 minute, the 5 minute, whatever. Okay, so there's so many different ways to trade it, but just understand that if you want to mark out a high or low, just follow this simple process no matter what time frame you're on. If you're on like the lower time frames, then sometimes it can get a little bit choppy compared to the high time frames, but that's just something we have to, you know, look at and just think, okay, well, it's a lower time frame, what do we expect? But yeah, thank you guys for watching. Hopefully this has made sense, and like I said, there isn't really much to it. It just contains the 3 candles. I'll put some images below, and yeah, you can go take a look at them. Cheers, guys.